Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We've been conducting these for the past 5 months. We greatly appreciate connecting with you. We always learn so much from your questions. So let me kick it off and cover some housekeeping items. We're using this modern platform, and you can see this week we're bringing video to you to enhance our forum discussions and just the overall presentation. Please disable any pop-up blockers. You can earn CPE. You just need to click 75% of these pop-ups. You can also resize the windows, so please do that. There's a toolbar at the bottom. You can leverage that to ask questions. You can also use that to download materials. That orange button with the arrow, that's what you click on to get the materials, the presentations, the FAQs. And then you have the CPE button, and at the end of the webinar, you can click on that to get your CPE certificate. But don't worry, if you don't get it at the end, you will receive an email with information on how to receive it. So let me now introduce the presenters for today. We've got a very full agenda. I'm Eric Auskerson, the President and CEO of CPA.com, the AICPA's business and technology arm. With me are Sue Coffey, who leads the public practice area for the AICPA, Ed Carl, who leads our tax area, Mark Peterson, who leads the advocacy group in Washington, D.C., and Lisa Simpson, who you all know, who leads our firm services area and has been putting together all of the resources. Her and her team have been putting together all the resources for the PPP program. So let's just quickly highlight what we're going to be covering today. We always start out reviewing what we've covered over the past month and highlight some of the top questions in our FAQ document. So hold off on asking questions until we share that with you. We're then going to cover the latest activities in DC, what's happening there with the policymakers. We're going to do a deeper dive into the presidential memorandum on the payroll tax deferral. We're going to talk also about how we're thinking about where things stand with the PPP expense deductibility and how to manage that. We'll also cover the latest guidance. We're going to have a little bit of an independence discussion, and then we're going to give you an update on where some of our tools stand. So Lisa, let's first just get into some of the materials, some of the areas we've covered in the most recent town halls. Lisa, you're on mute there.
Bingo, I'm the first one.
Yes.
All right, I had to get that out of the way. So you'll see on the slide that we've tried to recap the highlights of some of the previous presentations. So if you missed it, or if you're looking for a refresher on what we talked about, you've got the list there. I will tell you that if you didn't visit us on August 6th, which was a long 2 weeks ago, you might want to take a look at that one, because we went into the August 4th forgiveness FAQs that came out and gave us some surprises. So take a look at that if you missed that presentation, but then you'll also see you've always got access to the recordings via the AICPA TV Town Hall link there. We, as Eric mentioned, we like to tell you how to find some of the answers to the most frequently asked questions that we get. Happy to report that we moved a couple over with the last set of FAQs, and you'll see a good list here that you can quickly look at. These are references to the FAQs that you'll have in your materials that Eric highlighted with the orange download button, so you can easily access those, or it might be a link to a Journal of Accountancy article or a different resource that we've highlighted there. Just a couple to point out. On utilities, we talked on the last town hall about fuel. We were told verbally that fuel is eligible for forgiveness, and you'll see that in the FAQ as a listed utility. Also quite a bit of discussion around what a transportation utility was. So again, good reason to visit that previous town hall. We also have some burning tax questions that have been top of mind for a lot of you. So that's going to guide a lot of the conversation that we're going to have with Ed Carl a little later. So if you've got some tax questions, just wait a little bit longer into the presentation, and we'll see Ed covers those. If not, then feel free to submit those via the Q&A. One of the last biggest questions that we have remaining is how FTE reductions will work if a borrower is applying for forgiveness. We do not know the answer to that. I've got lenders asking me how that's going to work, and we simply need additional guidance. So if you have a question about that, unfortunately, we got to wait just a little bit longer.
Thanks, Lisa. I mean, our FAQ document's growing like the SBA document. So where are we at? I mean, we've been at this for 5 months now. What we're really focused on right now is clearly the forgiveness application. We'll be talking about that today. We're also thinking about PPP2 and business planning. And what we're thinking about for the firms is building capabilities. We're putting more resources into advancing some of these capabilities. We're going to show you a 2-minute video today on our PPP forgiveness tool. And we're working in advance on a PPP2 application. So what we want to do is help put some capabilities in place for you this fall so you can just be more proactive in supporting your clients' needs. So we think this is where you need to be headed now as we continue to stay in this business relief phase, as well as in this, refocusing on what is the business models for your clients and working on things such as forecasting planning. So we'll continue to be talking about both business relief and forecasting planning and rethinking business models as we move into the fall period. So let's now just take a quick look at what is hot in the media. Mark Peterson is going to be covering 2 of these topics. There's a new bill, the skinny bill that the Republicans have just put forward. And there's also a lot of discussion around the presidential memorandum, and Ed Carl is going to be discussing that. But I just want to make a couple of comments on another matter, and this is related to what's occurring in the discussion around the payment of agent fees by banks. We clearly realize that there's a lot of anxiety around this issue. There's an article here on Bloomberg Tax where we provided a number of comments. We stated that it's clearly not too late for banks to pay the firms these fees. We know that the firms did a lot of great work back in April and May, and we've been encouraging the banks to act in good faith and understand that at times it was not always possible to get those engagement letters put in place, and to review this with the firms and to do it in a good faith fashion. So I encourage you to take a look at the Bloomberg Tax article. It's got a number of statements from us as we view this overall situation. So now I want to pivot to the policymaker discussion with Mark. We're continuing to talk about phase 1, PPP phase 1, but really there's only a couple of elements that are left there. The final guidance that Lisa just referenced, that one FAQ that we want to have answered. But the key thing here is there's still very few banks that are beginning to process these applications. So we're continuing to encourage patience as we see what happens with these phase 4 legislation activities, which could still influence PPP1 with some type of simplified or automatic forgiveness. So Mark, I'll let you kind of set the stage on what's happening in DC.
Sure, Eric. There we go. So the first slide's entitled State of Play. The answer to that is it's a little rough. The negotiations that have been going on for the CARES 2 Act, the second big package or phase 4, have been going on basically since the first one passed that created PPP and provided a lot of the other relief that we've seen. And there are challenges in those negotiations. I'll take you through that. But there are also glimmers of hope of bipartisan agreement on some issues within those negotiations. And there are some issues in there that we care about deeply. And we feel confident we're going to see a resolution when there's an opportunity and a vehicle and a deal. Outside of our issues, where's the conflict? In May, the House passed a major bill called the HEROES Act, really focused on getting lots of other things. It was a big bill, about $3 trillion, getting a lot of assistance to the state and local government. The Senate Republicans put together a bill. This one was called HEALS, which was referred to on the last slide. Again, large package, partisan package, passed or was conceived by just Republicans in the Senate. House package was voted on, and it was a vast majority of Democrats. I think only one Republican crossed the aisle. So these are negotiating positions. And then we've seen the administration really focus on, as these discussions on compromise have broken down over the last few weeks, are what are things that they could do through executive action. And Ed Carl's going to get into that when he talks about the presidential memorandum. Congress is out right now. We're in convention season, as you probably know. We're in the middle of the Democrat convention. Republican convention will be coming up. And they're expected back after Labor Day. That doesn't mean discussions won't be going on, but it really does put kind of a pause on major resolutions. The issues that I mentioned where we do see some hope, again, we need the political opportunity and a legislative vehicle to carry them, are things like deductibility of PPP expenses. It did not show up in those in the two packages I mentioned, the HEALS Act and the Skinny HEALS Act, which is just a smaller version of that Republican proposal. However, the major tax writing committees in the House and the Senate have been supportive. There are vast numbers of House and Senate Republicans and Democrats that have signed letters of support. It is not in the skinny package, which is the latest. However, we feel good, as good as you can feel, that it's going to show up in the package that we ultimately get to. We've been very supportive of simplification of loan forgiveness applications. Simplification is a good thing in this process, allowing 501c6s to get access to PPP, and an issue related to mobile workforce too. We've been supportive of, and we've seen in some of these legislative vehicles that would really, just during this period of time under COVID, have a de minimis standard so that you don't have to worry about state income tax withholding if you're outside of your home state. Some level of state and local government relief, although there's controversy around that, but there does have to be something that will help practitioners and their clients deal with a tremendous amount of pressure that's going to be on the state budgets. And then, of course, liability. As businesses and firms are working with their clients or opening up, you got to figure out how you're going to deal with liability around customers and clients. So what's the outlook?
Where's it going, Mark? Where's it going?
This is one that's hard to get right. Although one thing we have on this slide, we have final stimulus package. That's because we're looking for an end to the current negotiation. But I got to tell you, I think regardless of the election outcome, we could be talking about more stimulus, more packages, more engagement of business relief well into next year. So this isn't over, but we're really focused on this stage. The House has a bill out. They've said it's their negotiating package. It's the $3 trillion one I mentioned. The negotiations were between that and a $1 trillion Senate bill. Those negotiations broke down. The Senate has yet to pass a bill. And so where they are right now is the administration's working with the House Democrat leadership and the Senate Republican leadership to see if they can bring something together. So optimistically, they come back after the conventions post Labor Day. They figure out how to pull together a large bipartisan deal. May not contain everything. They'll have to negotiate the level of state and local funding. They'll have to negotiate liability, but it would be a big deal. Bigger the better as we're concerned, because of all of those issues I outlined. They're more likely to make it in there. Pessimistically, you start to get closer and closer to the November elections, and it becomes harder and harder to cut deals. We're in a political season. Each day they're assessing the dynamics of not having a package here of relief. And then once you pass the election, it's very likely that it would get pushed into January. So that would be my pessimistic view. Having said that, Eric, the dynamics change on a daily basis. So, we've seen unemployment numbers come out. There's a lot of pressure on supplements to the unemployment insurance. People are home right now. Members of Congress are home right now dealing with and hearing from their constituents. So as they come back after Labor Day, those dynamics could change. And so, we could see something in between this. We could see a series of packages. The last dynamic, which is going to be interesting too, is, at the end of September, they've got to figure out how to fund the government again, which is really the big job. That's why they come to Washington, is figure out how they're going to pay for the government. That could be another vehicle that could carry along potentially some of the issues we've been discussing. So there are some possibilities for opportunity. I'm trying not to be too pessimistic, but we are seeing some challenges in the negotiations.
And Mark, just one thing to state, based on that, comprehensive kind of summary of all the different things that could happen. It looks like it's more of a question of when there'll be more business relief. There could be more business relief in September, and that's why getting ready for a PPP2 phase makes sense. But then if it's not September or October, it's most likely going to be December and January. And if you think about it, it's almost September 1st. So we're talking, it either is going to be in the next 45 days, or it's going to be in the next 120 days. So and I think, as you said, we've heard a lot of good feedback on what PPP's done, as business relief's done. So if it could happen in September, or it could just push out. But the firm should all think about just getting ready, because most likely there will be more relief.
Absolutely. Again, the indicator to be positive on, Eric, is the fact that PPP2 has been showing up in these vehicles, and it's bipartisan support. It's just caught in the gravity of this larger negotiation. And so that has to play out. But I think you should prepare, and you should be optimistic.
Right. Well, Mark, great. We'll be coming back to you in open forum. And Ed is down there in DC with you every day. So Ed, this was pretty exciting. August 8th, big presidential memorandum. So why don't you walk us through that?
Very exciting. And I am with Mark socially distant every day, so that's good. So Mark talked a little bit about the context of what's going on, and he mentioned the House and the Senate and the administration trying to come together. He mentioned the priorities, including the administration's priority of doing some kind of payroll tax relief. Those negotiations broke down. Congress left for recess for the conventions that are going on this week and next week. Won't be back until after Labor Day. So there are specific actions that a president can take. If you go to the next slide. So I just want to spend just a moment before I go into the details of what was in the memorandum to explain what the president actually did. So there are basically two approaches, or two powers, two categories of power that the president has. In terms of what's been going on with Congress, those are the informal powers, the negotiation, letting Congress know what is important to the president. And that's been going on for several months, focusing on the payroll tax relief. But they also have direct action, institutional powers, constitutional powers. And when the negotiations broke down, the president utilized the Internal Revenue Code. It's basically the same code section for which the president was able to postpone the filing and payment of taxes until July 15th. That was something that was important to most of us and went on earlier this year. It's a code section 7508A. It comes up with all of the disasters, the hurricanes and floods and fires that we see throughout the country every year. He used that power to release a memorandum, an executive action. It wasn't literally an executive order, but an executive action in the form of a memorandum. And that memorandum will stay in force until either the president withdraws it, there's a court challenge, a legislative reversal, or some kind of a revocation by a successor. So what does that memorandum direct? It indicates, and frankly, there's not a lot of detail in it, but here's what it does say, that the Secretary of the Treasury is asked to withhold or defer the withholding, deposit, and payment of the employee's 6.2%. That's the FICA tax, the Social Security tax, the employee's share only. There is, for a period, it's so again a 4-month period between September 1st and the end of the year. There is a wage or compensation limit, so it would come out on a yearly basis, $104,000 salary for a year, but they measure it by a bi-weekly pay period, and that's limited to $4,000. And it says at the end of this memorandum that the Secretary of the Treasury is directed to explore avenues, including legislation, to eliminate the obligation to repay the deferred amount of taxes. So that really is a big question as to what happens. Now, there was a subsequent clarification by Secretary Mnuchin a day or two after that memorandum was released, where he indicated, answered a base question, is this mandatory or is it elective? Now, he said it was not mandatory, that employers could elect into this. AICPA has a base question that is a little bit different. Since the taxes are imposed on the income of each employee, we believe the employee should be the one who makes the deferral decision. And also the employee should be completely responsible for the repayment of the tax. Many of you might be aware that there are large penalties on employers who withhold taxes and fail to pay them in. Those penalties and the amount of the liability can even follow an employer if they shut down the business and start a new entity. Those taxes, those penalties that go along, the responsible person penalty can follow the employer even into a new business. So they're quite significant, and it's an important issue. Nevertheless, the employer still has to implement this, and the idea that the employee is responsible for making the election, and we believe it should be an affirmative election, doesn't make it necessarily simple to implement. But we've heard from a lot of members who are saying that on speaking on behalf of their clients, that they want to take their clients, the employers, out of the decision-making process on this. They thought it was important to do that, and that was one of the reasons that we took that position.
And just to say, now we're going to this next slide here. This comment letter, I think we also have in the materials, so the full letter's in the materials. But back to you, Ed.
So there are a lot of questions that come up. We did submit a comment letter only a few days after the memorandum was released. There are so many issues that come up. What if the employee works in more than one job? What if the company goes out of business? What if the employee changes jobs? That $4,000 bi-weekly pay period limit, do you apply that $4,000 for each employer that the employee might work for, or is it a cumulative amount? How does that work? There are so many questions, as we often have with new tax rules. There are definitional issues. How do you define wages or compensation? Is it just the base salary? Does it include bonuses? Does it include vacation pay? So we have those usual definitional issues. There have to be processes developed. So if Treasury does agree that there should be an affirmative election into this, can they also revocate out of this? What happens if September 1st comes and the employee doesn't want to participate? They want the withholding because, as we know, with many taxpayers, they like having large refunds with their 1040. We think the way this would be processed, if an employee left the business before the end of the year, how would they repay the taxes? So we believe it would have to be on the 1040. The 1040 would have to be revised. So as I started to allude to, we know a lot of taxpayers like having a big refund on their 1040. This would reduce the refund. So it would provide a easier mechanism, a better mechanism to repay it, but we'd wind up with unhappy taxpayers. And if a taxpayer elected into this and they found out or realized that they were going to reduce their refund later, they might want to revocate. How do you do that? And could you elect in, revocate out, elect back in? We don't know the answers to these questions. So there are a lot of mechanisms that have to be developed, processes have to be developed to work this all out.
And so just to add one thing, I mean, I was on a, and you've been on some of these calls, our payroll coalition on a call earlier today, and one of the leading payroll providers stated, it's about 100 million employees in the U.S. that could be impacted by this, and they appreciate all the questions that the AICPA has put forth. The payroll community also has a number of questions, and right now they need those questions answered before they could enable the systems. And that if all these questions are answered, then potentially sometime in September, those platforms could be enabled. But we're in a similar mode to almost the PPP forgiveness. We need to wait. We need to wait for more guidance before these payroll systems can even be updated to manage this.
Right, and similarly, Eric, are they going to issue FAQs like they've been doing with the PPP program as the form of guidance? And how will they issue that guidance? We heard rumors that the guidance was going to come out last Friday. I didn't believe that one. I didn't think they had enough time to do it. Now we're hearing rumors that it'll come out this Friday. I think FAQs in our line of business seem, the rumors fly for FAQs, with a PPP. We've been dealing with rumors for months, right? So before FAQs came out. And will they give enough guidance to make a decision completely? So they need at least enough guidance to make the decision to opt in if there's an option. But they also need to know what's going to happen at the back end, and will they have enough time to develop the back end guidance so that employees or employers or both can make appropriate decisions. So
Ed, on that,
a lot left to be seen.
A lot to be seen. So on that, I'm going to transition and let you and Lisa have a good discussion here on one of our top FAQs and try to provide as much clarity as we can for where things stand. So Ed.
Right. So I'm in touch with Lisa frequently now, and she's always telling me about the questions about PPP, and this seems to be our daily conversation about deductibility. Mark had this on one of the slides. It's an AICPA priority that Congress fix the problem that was created by the IRS notice. So when the PPP legislation passed, the CARES Act, it was quite clear that forgiveness of a loan was not taxable. But they did not clarify whether or not the expenses associated with the loan forgiveness could also be deducted. You might think that would be the case, but from a tax policy perspective, there are situations where it might not be deductible. In this situation, Congress has indicated after the legislation passed that their intent was quite clear that the expenses also be deductible. It's quite clear. AICPA supports the congressional intent. We believe it'll also help businesses who are still in severe economic distress have additional benefit. And so we support in essence, almost a technical correction to the CARES Act to clarify that. We're still waiting, as Mark discussed and Eric commented on. We're going to either see something either right after Labor Day or probably not until the end of the year, the beginning of next year.
But Ed, here, there's ways to kind of think through this. We've been hearing from a lot of firms on how they're thinking about managing this in the current year. What do they do?
So what do they do? I think the first thing, and Eric, you like to talk about this a lot, about the trusted business advisor role that CPAs play, and that's an important part of this. There have to be conversations with the client. There are a lot of considerations that CPAs and their clients have to go through, and that has to be a conversation that the CPA has with their client to talk about the timing. The question first came up to Lisa and to all of us as a fiscal year issue. So what happens if you have a fiscal year client, their fiscal year is ending, let's say June 30th, July 31st, the end of August. They incur expenses, but they clearly have not applied for a PPP loan. With the correction
PPP forgiveness, sorry.
To the forgiveness of the loan.
Right.
They haven't applied for it. And with the additional legislation that lengthened the covered period to 24 weeks, there is now a strong likelihood that will go towards the end of the year, where you get to the end of that 24-week period. And a more likely scenario that even calendar year taxpayers will have incurred expenses in 2020, but won't know about forgiveness until 2021. They may apply for the forgiveness at the end of this year, but they may not get an affirmative clarification from SBA until next year. That's very strong likelihood. The tax regulations and the court cases are very clear that you have to keep distinct periods. So you would have expenses incurred in 2020. You should deduct those expenses in 2020. That's what the guidance seems to indicate. And then a second step would be the forgiveness, and that won't take place until 2021. So some questions come up. If that happens and Congress doesn't have a technical correction, do you go back and amend? Likely not. You would probably keep the distinct years. So in that case, if you get an affirmative confirmation of the forgiveness in 2021, you would probably, we don't have a complete answer, probably have income in 2021. Now, there are a number of questions. If you deduct the expenses in 2020 and you have a loss, can you carry it back as an NOL? If you have additional income in 2021, is there any possibility? Probably not, but there could be a possibility that you would be in a higher tax bracket in 2021. So these are considerations that taxpayers have to have, clients have to have with their trusted advisors. But what I would say, and we've seen this almost every year for the last 10 years dealing with tax extenders, and I get so many calls from our members every year. I have a client that's in the ethanol business, and that ethanol credit expired. What do I do? Do I file the return? And my advice always is wait till the end of the due date for the return. And if we haven't had a correction by Congress by the due date, extend the return. Wait till the end of the extended due date. And if you get to the end of the extended due date, you're going to have to file a return based on the then current law. So we have a lot of issues that are up in the air, and we just don't know the answers to all of them right now. But those are some of the considerations that we have to go through.
So Ed, we're going to move to Lisa here. I mean, but what we're hearing from a lot of firms is that they know that their covered period's not going to end to the end of this year. going into next year. They got 10 months to do the forgiveness application. So that analogy you just gave works, where they're gonna give Mark Peterson and the team down there in DC a long time to get that settled. So it's hopefully
Mark is good. Mark is very good at it. And what we're going to do is look for two things. One is either the legislative technical correction,
right,
or additional guidance from IRS. And I would play out the string on those two and use the delay tactic to have a little bit more information to help make the decision.
All right, some great advice, and we're going to have some practitioners on in September to talk about how they're managing this as well. So maybe we'll have Ed moderate that panel. So Lisa?
Thanks, Eric. I'm going to jump in with a question that we're getting through the Q&A quite frequently, which is, should I be applying for forgiveness now? Or when is the best time to apply for forgiveness now? So before we dive into the FAQs, we're going to repeat the mantra of patience. The lenders are accepting some forgiveness applications on a very limited basis. The word they used in our conversation today, just earlier this afternoon, was beta testing. So do you want your client to be the beta tester for the forgiveness application process? Or do you want to sit back and wait a little bit longer, let the rest of the guidance come out, let the SBA and your lender get their processes flowing? Lenders are still trying to figure out what documentation they're going to be requiring. So patience is still our friend right now, and it ties into exactly what Ed was saying. So I'm going to quickly run through some FAQs that were released on August 11th. One of the first ones is one that we already talked about. So let me give you a setup here. The Treasury and SBA have released two separate sets of FAQs that we've got to monitor now. So the first one you'll see is number 50 and 51. So that's going to tie to the FAQs that were launched back in April. The first one talks about agent fees. Eric, you talked about agent fees at the beginning when we were talking about some of the media updates. So I'll let you weigh in there if you want.
Basically, the SBA, the government said they're not going to get in the middle of this, and they're going to let the banks and the agents, the firms, work it out.
Yeah. Next question was one that we were getting a lot, so we're glad to get some clarity there, that when a borrower is trying to figure out what healthcare benefits are eligible for forgiveness, vision and dental are included. We continue to get questions about topics like LTD and disability. We don't have answers on that, but we do know that vision and dental was included. Some questions were released within the new set of FAQs relating to the EIDL program. We've talked about EIDL and its interplay with PPP quite a bit. And basically, when the lender submits the application through the SBA portal, the SBA is going to match that up, know the amount of the EIDL advance, and deduct that from the amount that is remitted to the lender for forgiveness. That then becomes the loan that the borrower will have. So just some details there. We also got a new interim final. It's very process driven, and it is a deep look at how a borrower can basically protest or ask for a review of the forgiveness decision, the decision that either the lender made or the SBA made. We've got some time to deal with that one. I always like to throw this slide in there just as a refresher and as a heads up that our team is working on basically some case studies that we'll be putting into the materials for you in the near future. This is a big component of some of the questions that we get, so keep this sheet handy. It talks about who is an owner employee. It talks about those compensation limits, whether you've got an 8-week period or a 24-week, whether you're an owner or a non-owner. In terms of the owner employee, we may, and may is should be bolded there, we may get some additional guidance. Maybe we'll get a de minimis rule on that, but as for right now, the interpretation is that if you are an owner of one share or 1%, you work for the company, then you are an employee. The chart that is on your right, we've looked at for a couple of times, and that'll help you walk through what's eligible and not eligible based on the filing status of the organization. For those of you who are like me and don't know what the family attribution rules of 26 USC 318 are, I tried to plain English those for you. So hopefully that'll help a little bit going forward. I'm not going to spend time on these. These are in the interim final rules, but they give you an example of how to do the wage reduction calculations. The FAQs that came out August 4th, I believe, specify that reductions are based on the rate of pay, and that's a really key, the base rate of pay. So the base salary, the base hourly rate, excluding things like commissions or bonuses. So borrower friendly might make your calculations a little easier, might make them a little tougher, but you've got some examples there. And again, we'll be digging into those for you and creating some case studies and examples that you can look at. Let me throw in one other hint for you. If you are also like me and don't remember which interim final or which set of FAQs dealt with which topic, our team has developed an IFR and FAQ index, and you'll see it on our resource slide at the end, but I wanted to give a special shout out because I think it's going to be really helpful if you're trying to refer back to where you got the answer to that one question and now you can't remember.
Yeah, there's a lot of information that's been out there, so that's a good segue just to kind of how we're trying to advance. So thanks, Lisa, how we're trying to advance these tools. So you know that the AICPA built a forgiveness calculator, which is close to 100,000 downloads. It's been widely leveraged, and what we did was we took that forgiveness calculator and partnered with a fintech provider. And I hope many of you have already looked at these demo videos, but we're going to just run a brief portion of it in a moment. But let me first just talk about some of the key capabilities of this PPP tool. It's going to allow you to manage all of your applications in one place. You'll see that in this video demo. It's going to allow you to do things such as bulk uploads, directly import payroll values from the payroll reports. We're working on some APIs, or it might just be the uploading of the PDF. And as you'll see, it's going to facilitate the filling out of the 3508. So with that, let's play that video, and then we'll come back to some of the top questions.
After signing up, CPAs log into their loan forgiveness dashboard. The dashboard contains all of the loan applications that a CPA has created for their various clients. They can download any completed application packets with a simple click. Whenever they need to, a CPA can start a new forgiveness application for a client by clicking on the Create New Client button. First, they have to create a customer profile, and then move forward by entering the PPP loan information for that client. The lender name, PPP loan details such as amount and ETRN number, and the covered period. The list of approved lenders is taken directly from the SBA's website and kept up to date. Next, the CPA fills in the business name and address for their client. These details will be included on the official SBA Form 3508. On the next step, the CPA is prompted to verify the borrower's eligibility for using the EASY form. Based on eligibility, the next steps in the application change automatically as needed. If the borrower's business meets any of the three criteria, the shorter EASY form will be used. Otherwise, the full application will be used instead. In the full application, the CPA will then complete the Schedule A worksheet with employee payroll and employment details. The tool is configured with salary reduction as well as safe harbor eligibility calculations, and it calculates the reduction quotient automatically based on the CPA's worksheet entries at this step. Owner compensation is also added at this step. If the CPA wants to double-check their entries, they have access within the tool to the Excel-based AICPA forgiveness calculator so they can compare results at any time. After this, the system automatically completes the Schedule A calculations with payroll information. CPAs then input additional payroll benefits and the eligible non-payroll expenses their clients have incurred, such as mortgage payments, rent payments and utilities, and an EIDL grant, if there was one. After the inputs, the tool runs the final calculations and displays the forgiveness amount right on screen. On the next page, the CPA is able to upload common supporting documents that lenders require for verification of a complete forgiveness application. Then the system generates a fully filled 3508 form which the CPA can review to verify all inputs are correct. The CPA can even send this form directly to the client's email address to be e-signed through an IRS-verified e-sign method. Once all steps are complete, the CPA can download the full application packet as a zip file and send it to their client, who can forward it onto the lender for processing.
Well, hopefully that played well for all of you. And why we wanted to show that to you is that there's great interest in both the PPP forgiveness process, as well as longer term being ready to support things such as the PPP2 applications. And how we're thinking about this is that we know that the banks are going to be standing up platforms, but we've heard from many firms that we've spoken to that they would like to have a check and balance. They've got clients who their clients have worked with many different, through their set of clients, they might be working with 10 different banks, and having a centralized tool here to organize all of this information for their clients and then to verify that how they see forgiveness is how the lender sees forgiveness. And we are communicating with the lending community, and there may be some banks that just take this PDF file with all of the related source documents and utilize that to input into their system. Clearly, the national banks are going to have their own platforms where you'll have to be entering data into. But this is just an evolution that is happening every day, and we're continuing to work with the different stakeholders, the payroll community and the lenders. And to date, we've got thousands of firms that are leveraging this. So we just wanted to make you all aware of that. So with that, I now want to because we're talking about filling out these forgiveness applications, Sue, to invite you to talk about some of the independence matters related to that.
Yeah, sure. Thank you, Eric, and I appreciate that. We've been getting a lot of questions around the scope of PPP loan forgiveness services. And just as a reminder, we do have the loan service matrix on our website, which provides examples of services that you can provide to your clients around the loan forgiveness process. But it also goes into things that you need to think about as to how that service relates to other services you might be providing for your client, like tax, audit, review, compilation, et cetera. And so, Eric, if I can ask you to go to the next slide. One of the most common questions we've been getting is whether assisting a client with the loan forgiveness application impairs independence. So think about, providing this service for an audit client. And I'm just very simply, I'm going to say, no, it does not impair independence. But there is a but, or maybe I'll say that there is an and associated with it. When you think about loan forgiveness services, like advising your client on what to do and how to do it, gathering and preparing loan forgiveness documents, populating loan forgiveness applications, and using, for example, the tool that Eric just showed the demonstration on. They're non-attest services subject to the non-attest services rules in the Code of Conduct. Totally acceptable. But there are certain things you have to do. You have to document your understanding of the service with your client. You can't perform management functions or assume management responsibilities while providing the service. That's the client's job. We all know that. The client must assume responsibility for oversight of the service and evaluate the adequacy and results of the service. These are all things that are standard that we all know and do when we provide non-attest services for an attest or audit client. The good news is that the PPP loan forgiveness application and the tool that Eric just showed you really does help in that respect, because it requires the client to make certain certifications and to sign the application. And those certifications are very specific and help in the whole independence process. So those initials and that signature are really important. Advice that I would give to you when you prepare or assist your client in preparing the loan forgiveness application in whatever tool you might use, when you send it to your client for review and signature, have a conversation with them, just like you would with any attest service. It's a really good opportunity to make your client smart. Have a conversation about it, what's in it, why what's in it is in it. And that's a good idea to do for risk management, from a risk management perspective as well. And as a result of all of these signings and certifications, it does actually allow either you or the client to submit the loan forgiveness application directly to the lender, so that you don't have to get into who pushes the button question. So, Eric, that's it. The last thing I wanted to mention was that we're going to actually be going in a deeper dive on loan forgiveness services, as well as the independence issues, as part of our Ethically Speaking podcast series. That session is going to be sometime in September. We've not yet set the date. But if you're interested in attending and want to be notified when it is uploaded, you can just go onto our site, and the URL is at the bottom of this slide right here.
Thanks, Sue, and we'll also make sure we highlight that on the Resource Center as well. So we're going to get into we've got a lot of questions here that are coming in. So this is a slide that kind of shows the many different relief options available. There even were some employee retention credit questions that came in today. Maybe next week or following week we'll dig into that in a little bit more detail. I've seen a couple of questions come in regarding the PPP forgiveness tool. The one question, is it free? The base version for the PPP forgiveness tool is free. Some firms are asking for some enterprise capabilities. And also, we're going to build in the capability to do additional relief applications through it. So there will be an enterprise fee for that, but it'll be very, very competitive. And what we're trying to do is just put a capability in place for the firms and their clients related to something like PPP2 that could give you an alternative if you're having any issues with some of your lenders. But back to just the PPP forgiveness tool, yes, the base version is available at no cost. And there's other questions coming in saying, yes, there's bank forgiveness tools. Yes, there's going to be bank forgiveness tools. We are in constant contact with the lending community. We will see how this can interact with some of those lending platforms. The lending community was very appreciative of what we did with the forgiveness calculator. This tool here, one of the goals is to drive a common approach. When you go through the tool, you'll see that you can upload source documents. We're working on a recommendation document on what the required source document should be. We're going to be working with the payroll community and the banking community on this. So a lot to come in the next couple of weeks. And what we'll also do is have a 1-hour special edition just on the tool, just to review it, so you can really understand it in greater detail. So Lisa, hopefully you've maybe pulled a question or two out as I've just been kind of answering some of those tool questions.
Thanks, Eric. There is one other question related to the tool that I want to bring up. We've got our friends in business and industry that want to know if they can use the tool as well for just a one-off, and that is absolutely out there for you. So on the slide where we had the visual of the two of the tool, you'll see a link that takes you to the CPA portal, and then there's another link. It's pppforgivenesstool.com, and that is absolutely available for you. If you don't have 20 clients and your client is your business, then you're welcome to use that. I also want to talk about accounting. We are going to have a deeper dive into how to account for PPP loans in an upcoming town hall. We're going to try to get that on the book in September. So there's your teaser alert for that. A couple of other important things, and then I'll get to the question. We had a question about whether or not the AICPA Excel calculator has been updated for the August 4th FAQs. The answer is yes. And if you follow Carrie Hipsack on Twitter, you would already know that. But yeah, we're always pushing that out through social media. When we update the calculator, we didn't have to for quite some time. So new version of the calculator is out there. It simplifies the calculation of the salary and hourly wage. So it's a good thing. Mark Peterson, we're getting lots of questions in the chat about whether or not you have a sense as to simplified forgiveness, what the threshold might be. What's the chatter?
So we've heard lots of different numbers. 150 seems to be the number that has been out there the most. There's been the most discussion. Although, if I had to guess, I would put that as the ceiling, because the negotiations seems to be more about driving that down as it moves forward. I do think that there is a lot of focus on streamlining. So that is one that I'm feeling good about making it into the final vehicle, whatever that looks like. Again, I'd be surprised if it was above 150, and I'd bet money.
That's another reason why patience makes sense. I mean, we're hearing is some people are processing applications that are above 150 because there's not going to be automatic forgiveness at that level. But another reason for patience. I saw a question that came in just due to some of the postal issues. Is the AICPA doing anything related to IRS notifications, Ed? How are we, or Mark, either one of you, how are we managing that?
Yeah, we've gotten a lot of contact about that. I know that Chairman Neal from the House Ways and Means Committee sent a letter to the commissioner about this. We've reached out to them as well, and we've actually set a meeting that's on our list of topics for next week with the commissioner. The essence of the issue is that the IRS has some huge, we don't know the exact number, they haven't said, but it's somewhere upwards towards 10 or 11 million pieces of mail to process. That includes payments that taxpayers have mailed in. Meanwhile, returns that would show a balance due have been typically e-filed, and then the IRS processes that e-filed return doesn't see the payment that should have been made because they're not processing all of the mail yet, and sending notification to taxpayers saying there's a problem here, no payment. So we're on that, but it is a problem, and working on it.
And just generally on the postal issue, they're talking about an emergency session to bring folks back on Saturday for the House to pass some funding. So, but even if they can get the funding out to the Postal Service, there's a significant issue. It's going to take some time to address the
Mark. Actually, that additional
that
funding will exacerbate the IRS problem.
Right. So hopefully we're going to close on that one. Hopefully, Mark, maybe they tie the PPP and the deductibility issue to the postal thing. We'll see. It's every day. Stay tuned. We are on social media, on our Twitter accounts, LinkedIn, and obviously through the regular town halls. So you saw we had that opening loop there. We're going to continue to have an opening loop before these town halls. So you saw this is our resource page. It's got links to all of our different materials, to those resource tools that we just highlighted. Here's a broader coronavirus tax resource center that you can leverage. Some additional upcoming learning opportunities on small business, bankruptcy, COVID-19 audit implications. I know that has been well received. I think you also saw in the pre-webinar loop that next week we're going to have Senator Todd Young with us. So we look forward to his insights. So that's next Thursday, August 27th at 3 p.m. Once again, we really appreciate being with you. We take all of these questions in. We leverage these questions to drive our resources and to really understand, what are some of the top issues out there. I want to thank the team here today, the AICPA leadership team, as well as the team that helps us put on this weekly event. Hopefully the video worked well. Please do give us feedback in the survey form, and we hope you all have a good end of August, and we look forward to seeing you next week, Thursday at 3 p.m. Thank you very much. Bye-bye.